Welcome back to my Midsummer Greater Toronto Area Market Pulse video update. Thank you for tuning in. Today's video is a little longer than normal, but there's a lot of great content that you will hopefully find very valuable. So let's kick things off with a general market update. We can really break down 2020 into four segments. The introductory segment, or the January to mid-March timeframe, which saw a surge with all markets gaining momentum and pushing ahead. Secondly, is the lockdown segment, or the mid-March to mid-May timeframe, where for the first time the government said, please shut down your business, and we complied like good Canadians. The third segment is the bounce back segment, or May to the present, where we're seeing in many of the markets in the country all that pent-up demand from what would have been a crazy busy spring 2020 pushed forward into the late spring and summer, giving rise to more sales, higher prices, and multiple offers. And the final segment is the near new normal chapter, which is once we've had a treatment and or a vaccine for COVID-19. There's really three numbers that we should always keep an eye on in real estate. Number one is the number of sales, as we always want to know if our pie is getting larger or smaller. Number two is our prices, to see if they're stable, going up or going down. Number three is the months of inventory, because it gives us some perspective into what's going on to happen in the next couple months. So if you look at this chart, 2020 started off with a bang. Sales went up from January to mid-March before COVID-19 happened. Then we saw a substantial slide for a month and a half before things started to pick up again in May, June, and July, despite the pandemic pressures. Generally, in June and July, we're seeing slowdowns because of the summertime. We're starting to hit the summertime, and that's not the case this year. As for inventory, we continue to experience a supply shortage. Sales were growing at a faster pace than supply, thereby contributing to a lower months of inventory number, even during the lockdown period. Keeping in mind 4 to 6 months of inventory is a balanced market, above 6 is a buyer's market, and below 4 is a seller's market. In June, we were actually at 1.6 months of inventory only, which is back to the old crazy market multiple offer days. That's the lowest we've been in over 3 years in the month of June. With demand and sales up and inventory down, prices had nowhere to go but up. We saw year-over-year price increases of about 12%, and I'm telling you, when COVID hit, I'm not convinced many people would have expected this to happen. So we're sitting in an extremely hot market right now. The fundamentals are strong. We've got low borrowing rates, a strong economy, and immigration growth, job creation. It's clear that the demand during the lockdown disappeared, not because of weakness in the economy, but because our leadership asked us to shut down our businesses. It's very clear that the confidence of a significant portion of Canadians in the real estate market and in real estate ownership remains very solid. This months of inventory chart that breaks down by home type is sort of interesting, because if we go back, we know our condo market months of inventory used to be below the months of inventory of our detached market at one point. But it's actually starting to shift right now in favor of the detached market. And this next slide breaks down the sales by quarter in 2019 and 2020, and shows us how our sales are off by about 18% when we're comparing the first half of 2020 to the first half of 2019. Now, moving into the fall, who knows what's going to happen? I think the inventory will start to rise a little bit because of some people defaulting and being forced to sell, but it'll be nowhere close to what some people think and some entities have predicted. Here's why. In this first slide, you'll see that Canadian mortgage default rates are historically much, much lower than the US, and they're roughly under the 1% mark. In the second slide, the Bank of Canada modeling shows federal policy actions and payment deferrals are expected to significantly reduce defaults. This third slide shows 70% of Canadian mortgage borrowers have enough liquidity and liquid assets to cover 6 months of mortgage payments. And this final slide shows how only one in 10 Canadians with a mortgage have applied for a mortgage deferral. I also know we had some unemployment resulting from COVID-19, but most of it was temporary in nature. Not only that, when you peel back to look at who's lost their jobs and you overlay that on homeowner versus non-homeowner, a lot of people who are non-homeowners are actually the ones who have lost their jobs. I think for the rest of summer, sales are going to be substantially high. They're higher than what we've seen in previous years because we're dealing with all that pent-up demand. People are getting back out right now, and I'm not convinced we're going to see a lot of inventory come on the market, which means our months of inventory will probably remain relatively low, causing strong price growth over the summer, which essentially means that the rest of summer is a great time for people to sell. as there's no inventory and to buy, as prices will continue to increase from here in on. Having said all of this, I don't expect the momentum that we're seeing now to hold to the end of the year, but I also don't expect a crash either. The only way you really get an adjustment in the underlying value of Canadian housing is if we have a lot of homes on the market for sale and no buyers. Remember, we went into all of this with a supply shortage. We've been talking about this for 5 years now. We have structural housing shortages in major cities. So the question is, will supply increase and demand drop? And at this point, the likelihood of this happening is minimal. Talking about supply and demand, the government is working on addressing the housing supply shortage. There's a bill in the works, and its focus is to address the supply-demand imbalance affecting the province of Ontario that's forcing families, young couples, new families to go outside of the green belt into the outer surrounding areas like Barrie, London, and Cambridge, where we've seen a lot of growth. And they're looking at things like development charges, speed of development, zoning orders, and so on and so forth. Housing belongs right up there and is hugely beneficial to our economy, so addressing its challenges and providing adequate and affordable housing is of paramount importance. Some of you may have heard about the CMHC prediction, Canada Mortgage and Housing Corporation. The head there, whose contract was expiring, was making predictions with no data or supporting evidence that we're going to see a substantial drop in price, as much as 18%, and as a result decided they were going to tighten their lending standards by changing the credit score requirements and the debt-to-income requirements and offering mortgage insurance to fewer people, mainly cutting off the first-time home buyers who have historically helped the real estate market recover in previous similar downturns and who are actually active now. The good news is that Genworth, another mortgage insurance lender, it's a private insurance lender, decided they were going to go in a separate path from CMHC, as the CMHC changes were not federally mandated. And they decided they were going to continue to support the segment of the market, the first-time home buyers in the marketplace. If we look at other serious forecasters in the market, including Royal LePage, and at the results that are pouring in from May onwards, house prices have actually started to rise again because we have more buyers than we have listings available in the marketplace. Other market indicators we can look at are the Royal LePage website, which is the country's #1 real estate company website. We're seeing a growth there in the number of visitors, and that's a great indicator of people's desire to get into real estate. There's also all sorts of other indicators, such as a rise in the number of showings, appointment bookings, and transaction spending. Essentially, there's positive momentum from coast to coast. Some emerging trends and legislative developments that we're seeing is, as they relate to COVID, COVID has really changed the work landscape for a lot of people as more and more people are working from home now. And should these opportunities persist, we may see more and more people start to move to the suburbs and the exurbs, as seen in the slide. With more telework opportunities, 1 in 4 active buyers have changed what they're looking for in their next home, perhaps looking at homes with space for an office or two, as seen in the slide. We're also seeing home buying habits changing, as 42% of Ontarians would consider buying virtually. We'll see if this habit remains in the long term. And lastly, we're seeing people charge outrageous penalties from their banks when they're settling due to the COVID situation. Hopefully the federal government will step in and do something similar to what they did with the auto insurance so that no unfair advantages are taken off the consumers, especially during these unprecedented times. Also want to make you aware of a Royal LePage program that we have rolled out recently, the WorkSafe Royal LePage program. It's a summary of best practices from coast to coast, summarized to help our customers with the 2 S's, safety and sales. We are endeavoring to provide the help and services to consumers, and we want to do so in a safe manner during the pandemic. Before I sign off, I would be remiss not to mention our healthcare workers and our government officials. Thank you for your continued dedication and commitment in fighting the COVID virus and bringing it to manageable levels. Without you, this would not be possible. Thank you also to all the Canadians out there who are complying with the public health guidelines and therefore helping our country to gradually reopen and return to some semblance of normalcy. Not the way we were before, but starting to hopefully move in that direction. Also want to give a shout out to all the Royal LePagers driving the Royal LePage Shelter Foundation and the donors to the foundation. The foundation is focused on helping abused women and children. If you'd like to donate, please click on the link below. Hopefully you found this update helpful. If you have any questions or need help navigating the real estate landscape during this time, I'm happy to help. And until my next update, take care of yourselves and all the best. Bye for now.